Hey folks, it's Rich Reynolds at Highland. I just wanted to give my perspective on what the Fed's move today mean for mortgage rates. As most of you know by now, the Fed did lower the Fed funds rates by 0.25%. What this means is credit cards, car loans, and things like that are going to be lowered by 0.25%. It does not mean that mortgage rates have lowered. What that actually means today is mortgage rates are going higher. And let me explain this all to you. So, first of all, when the Fed chairman said that they're being cautious, what the market heard is that we may not cut rates soon. The Fed chairman said that there was a large probability that rates were going to be cut again in December, and they may be backing off that. The Federal Open Market Committee is the group that actually makes that decision, along with the Fed chairman, and right now they are undecided amongst the group as to what the best course of action is. Part of the problem is the inability to get all the latest government reporting. In addition, if you look at inflation and you back out the tariffs, inflation is not all that bad. Employment is softening, as we can all tell with Amazon and Facebook and Target and all these other companies announcing massive layoffs as of recent. Um, so let me kind of show you what the market is doing right now with mortgage interest rates. So this was where we opened this morning, and we are down 10 basis points for the day, which is not good. Means to higher pricing. This is mortgage-backed security pricing. Mortgages are based off mortgage-backed securities, not the Fed funds rate. In addition, over here, mortgage-backed securities do routinely follow the 10-year Treasury, 10-year bonds, and they started this morning below 4, and they're back up to almost 4.08. They're at 4.069, but at 4.08. Over the last week or two, they've been hovering below 4, and we've seen the lowest mortgage rates that we've seen in a while. But as of this afternoon, mortgage rates appear to be higher than they would have been yesterday at this time. And depending on what happens with going forward, with whether they do decide to lower that Fed's rate again or not, will make all of this either mortgage rates continue to rise or continue to fall more. If you have any questions or need any assistance with mortgages, please give me a call, 813-758-1389. Thanks.